Okay, hi, welcome back. We are doing marathon revision for CA Final Advanced Auditing subject. We did part 1. This is your part 2. I just remind you, part 1 and 2 is basically in YouTube. From part 3 onwards, we have the sessions on Unacademy app. They are free sessions. You can just use the code Yeshas or Yeshas Live, YESHAS. Yeshas or Yeshas Live, and you'll be able to access the free sessions which are there on Unacademy platform as well. So the links of Unacademy platform, you can just log into my Telegram channel. My Telegram channel is CA Niket Thaker. You'll find out all the links of our lectures. Let's move ahead. Chalo. Okay, just before that, I told you can watch my next class free on Unacademy app. That's a special class under Unacademy, and we have a new feature which is launched. So which is that new feature? Raise a hand. See, if at all you have a doubt, many times by typing you're not able to basically tell it properly to us. We have a voice chat feature which is basically coming up in Unacademy. You can raise your hand and ask your doubt through a voice as well. Plus, we have a dedicated team for doubt solving, so you can ask doubts anytime, anywhere. And the Plus subscription as well as Iconic subscription, two types of subscriptions are available. Plus subscription is having access to all your live lectures as well as the recorded one. Iconic may you get additionally printed material. You have a mentor assigned to you, and you have evaluated answer sheets under your Iconic subscription. You can use code Yeshesh or Yeshesh Live. You can get 10% discount on the subscriptions. Okay, let's move ahead. Okay. So we reached till section 147. We finished section 139, 38, 40, 41, 42, 43, 44, 45, 46. 46 tak ho gaya. 147 we are required to start. Let's begin. Chalo, am I audible, visible properly? Thank you. Bala has a question, sir. FR marathon, would it be also 20 hours? Bala, FR marathon will be around 30 hours, 30 hours, and FR I'll be starting probably from 23rd of November. It will be for 7 days, 4 hours a day. It will be 28, 29 hours. Okay, now section 147 is on penalty. If company violates section 139 to 146, penalty on company is minimum 25,000, maximum 5 lakh. See, company we cannot imprison. Officer in default. Officer in default who is violating 139 to 146, for them the penalty is 10,000 to 1 lakh, plus there can be an imprisonment up to 1 year. Now important is penalty on auditor. If auditor violates section 139, 143, 144, 145. Now they've written only specifically this. See, if any section has a penalty, take that. If that is not applicable, take section 147. So if 147 also doesn't cover, then the court will decide the penalty. And don't think much about it. Court will decide the penalty. If auditor violates section 139, 143, 144, 145, the penalty is minimum 25,000, maximum 5 lakh, or 4 times the remuneration, whichever is less. But if he does it knowingly, willfully, the minimum penalty is increased from 25,000 to 50,000. And the maximum penalty is increased from 5 lakh to 25 lakh, or 8 times the remuneration, whichever is less. Plus there can be imprisonment up to 1 year, plus he is required to refund the fees. Yeah, if he does something wrong knowingly, willfully, he has to refund the fees, and he has to pay for the damages anybody suffered because of his wrong reporting. Now sir, how much damage to be paid again will be decided by court of law. Okay, so auditor will have an imprisonment only if he does it knowingly, willfully. Okay, imprisonment, sir, whether all partners will be imprisoned, only the partner who has acted negligently or partner who has acted wrongly, that partner is only going to imprisonment. It's not all partners. Okay, so whenever it's a liability, normally for a firm, its liability is joint and several. But if it's imprisonment, it's only for the partner who has acted wrongly. That was section 147. Next is section 148. That's your cost audit. Next is cost audit. Pradeep, imprisonment is still there. It's not yet removed, but it's only for the partner who has acted wrongly. Okay, cost audit, section 148. Now, as per section 148, they are telling, if at all you are engaged in production of such goods or providing such services which are prescribed by CG. If you are engaged in production of such goods or providing such services which are prescribed by CG, then you are required to maintain costing records. And your costing records will be a part of your books of accounts as per section 128. Now, sir, what are such goods, such services? For that, we have the rules. What are such goods, such services? For that, we have the rules. I'm coming to the rules. Now, if cost audit is applicable, who will be the cost auditor? Cost accountant. Cost accountant, within the meaning of Cost Accountant Act, again, he will be holding certificate of practice that way. Sir, who will appoint the cost auditor? It will be appointed by board of director, not shareholder. Board of directors will be appointing the cost auditor. If audit committee is there, audit committee recommends to board, board will appoint. Audit committee there, audit committee recommends to board, board will appoint. Okay, sir, how he will be reporting? He will be reporting as per the cost auditing standard. He will follow the cost auditing standard and he will give his report to the board of directors. And if there are any negative comments, in cost auditor's report, BOD has to give information explanation to central government within a period of 30 days. And so rights and duties are same. Only thing is he doesn't have the responsibility to report as per 143 subsection 3. वो सब नहीं है. That reporting will not be required. And he is appointed by BOD. He is reporting to BOD. That's more important. Now coming to the rules. Now coming to the cost audit, cost record and audit rules 2014. See, every time whenever there are rules or there is act, rule 1 or section 1 is kind of heading. Rule 2 or section 2 covers the definition. I'm directly starting with rule number 3. Who has to maintain costing records? If you are engaged in production of such goods or providing such services which are prescribed by CG and your overall turnover is 35 crores or more. So one, your turnover has to be 35 crores or more, and you are engaged in production of such goods, providing such services which are prescribed by CG, then you have to maintain costing records. Now, sir, which are that such goods, such services? So there are two parts divided. One is regulated sector, other is non-regulated sector. Regulated sector में telecommunication services, generation, transmission, distribution of electricity, petroleum product, drugs and pharmaceutical, sugar and industrial alcohol. This is just a regulated. Exam angle not relevant. Non-regulated, again a list is given. That's fine. So you should be following in list and your turnover has to be 35 crores or more, then costing records are required. Now, sir, when is cost audit required? Cost audit ke liye we have this rule 4. Okay, if you fall in regulated sector, your overall turnover, puri company, has to be 50 crores or more, and the list product turnover, the product falling in the list. So it is possible I might be producing two things. One is falling in the list, one is not falling in the list. I have two products, one falling in list, one not falling in list. The overall turnover has to be 50 crores or more, and the list product turnover has to be 25 crores or more. Okay, non-regulated sector. Non-regulated sector, if you're falling, overall has to be 100 crores or more, and the list product turnover has to be 35 crores or more. Okay, for maintaining costing records, overall turnover was 35 crores or more. Audit के लिए regulated sector overall 50 crores or more, list product turnover is 25 crores or more, non-regulated overall is 100 crores or more, and list product turnover is 35 crores or more. Okay, if at all you are maintaining costing records, the costing records are to be maintained as per the formats given in CRA 1. Okay, if cost audit is applicable, the BOD will appoint the cost auditor within 180 days from commencement of financial year. After appointing the cost auditor, they have to inform to. After appointing the cost auditor, they are required to inform to the ROC within a period of 30 days. After appointing within 30 days, and they will file form CRA 2. Okay, cost auditor will give his report within 180 days from the end of financial year, and he will give his report as per the format given in form CRA 3. And lastly, If there are any negative comments in cost auditor's report, BOD has to give information explanation to central government within 30 days. That will be as per CRA 4. The 4 CRAs are there. Now, important cost audit rules not to apply in certain cases. So, this case is audit is exempted. Audit is exempted. Records are still to be maintained. I repeat, audit is exempted. Records are still to be maintained. 3 cases. 1. Your revenue from exports in foreign currency. Your revenue from exports in foreign currency exceeds 75% of your total revenue. Number 2, you're operating in SEZ. And number 3, you're engaged in production of electricity. You are engaged in generation of electricity, but that's for captive consumption. That is for a captive consumption. So you are generating electricity through a captive generating plant, which is for a self-use only. Then it's not required. Okay. So these 3 are exempting cost audit. Records are still to be maintained. Okay, removal of cost auditor. Yes, he can be removed before the expiry of term. If he is removed before the expiry of term, it becomes a casual vacancy. Casual vacancy will be filled by board of directors. Anyways, cost auditor is always appointed by BOD. So casual vacancy will be filled by BOD within 30 days. Okay, sir, if it's due to resignation, if casual vacancy is due to resignation, would we need an approval of shareholders over here? Would we need an approval of shareholders over here? Answer is no. For appointing cost auditor, even though it's basically resignation, anything, it doesn't matter. It's always board of directors. Shareholders approval is not required. Okay, this was section 148. So we're done with 139 to 148 related to audit. Now going to the provisions relating to accounts. Okay, question from Baladeep sir, whether audit committee recommends the cost auditor? Answer will be yes. Audit committee will recommend, board will appoint. But it's not shareholder, board will appoint it. Okay, books of accounts section 128. Now this provision 128 to 138 are not much important from exam angle. Exam angle is 139 to 148 more important. Subject is audit. Provisions relating to audit are important. Okay, books of accounts, they have to be maintained at what? Registered office. Can we keep other than registered office? Answer is yes. BOD has to pass a resolution. Copy of the resolution should be given to ROC within a period of 7 days. I repeat, within a period of 7 days. Books has to be kept on accrual basis, double entry system mandatorily. Accrual basis, double entry system is mandatorily. Other place is fine. BOD will pass a resolution. Copy of resolution you have to give to ROC within 7 days. Now, sir, branch books, can I keep at branch? Answer is yes. Branch books can be kept at branches. But if you are keeping branch books at branch, a summarized return periodically every 3 months. A summarized return periodically every 3 months will be sent from branch to the registered office where the main books are kept. So, branch books can be kept at registered office and it can be kept at branch also. If kept at branch, a summarized return should be sent from branch to the registered office. So, registered office may either the full books are available or always the summarized return is available. Okay, sir, whether books of accounts are open for inspection by shareholder? Answer is no. Shareholders don't have a right to inspect books of accounts. They're open for inspection by board of directors. Board of directors. Okay, sir, if books are kept at branch, can the board of director can go and visit the branch to see the books? If branch is in India, the director can go and see the books. But if branch is outside India, okay, we have the summaries available. Give the summaries to that director. If he needs anything else, he will give a request. Company should get the copies of the document within a period of 15 days. And sir, can a director inspect the books of subsidiary? No, books of subsidiary associate can be basically accessed by a person authorized by board of director. Okay, the person from holding company. The board of directors of holding company will authorize a person within holding company who can access the books of subsidiary and associates. Who can access the books of subsidiary and associates. Sir, books are to be kept for how many years? Not less than 8 years. Word is not less than 8 preceding years. The current plus the preceding 8, that many years the books are to be kept. If the CG has ordered you to keep it for more number of years, you need to keep it for more number of years. And penalty minimum is 50,000, maximum is 5 lakh, and imprisonment up to 1 year for those who don't follow this provision. Officer in default wala. Done. This was section 128. 129 is on financial statement. Okay, the financial statement shall, the word written is shall. It shall show a true and fair view of state of affairs. It shall comply with accounting standards. It shall be in a format given under Schedule 3. Now, shall word means mandatory. Okay, the whether accounting standards are mandatory for all companies? Yes. Even Section 8 company. Even Section 8 companies are required to follow accounting standards. And sir, if Section 8 company is there and the net worth is 250 crores or more, would they follow Ind AS? Section 8 company, net worth 250 crores or more, would they follow Ind AS? Answer is yes. So Section 129 clearly says financial statement shall comply with accounting standard. It doesn't give any exemption to Section 8 company. It doesn't give exemption to Section 8 company. However, the above provisions are not applicable to insurance, banking, companies which are engaged in generation of electricity, any other class of company which have the format given under their own act. The Section 8 company is not exempted. Okay. Now the word came, it should be in a format given in Schedule 3. In Schedule 3, as of now, there are 3 formats of balance sheet P&L. Yeah, 3 formats of balance sheet P&L. Part 1 is applicable for companies following AS, that is Division 1. Division 2 is for those companies following Ind AS, and Division 3 is for NBFCs following Ind AS. So there are 3 formats of balance sheet, 3 formats of P&L in your Schedule 3. Next, every AGM, the board of directors will present the financial statements for the financial year and the shareholders will adopt it. The BOD will present the financials, you will take it. So would they be the audited one? Answer is yes. So the structure is, first of all, the financial statements are approved by board of directors, they are audited, then they are given to shareholders at an AGM. The board of directors will approve it. Who approves financial statement? BOD. Then they're audited and then it's given to shareholders. Shareholders will okay. Now, if you have one or more subsidiary or associate, sir, I don't have a subsidiary, I have only associate. Still, you are mandatorily required to prepare a consolidated financial statement. Mandatory. It shall. If you have one or more subsidiary or associate, you are mandatorily required to prepare a consolidated financial statement, and that should also be presented to your shareholders. Okay, next. If you want any exemption from this section, you need to apply to a central government. If central government gives you permission, then you can get an exemption from this section. For example, your financial year. The financial year is a year which is ending on. It's a period ending on 31st March. Now, suppose your holding company is abroad, they follow Jan to December. Your holding company is abroad, they follow Jan to December. And if you also want to follow Jan to December, apply to central government. Is the video fine or still lagging? Sandeep, Pradeep? I think it's fine. All good. Thank you. Chalo. Next is section 130. This is important. 130, 131 is important. Section 130, 131 is important. Just refresh from your side, Sandy. Okay, 130, 131 is important. 130, reopening of books of accounts on court or tribunal's order. The court or tribunal is telling you to reopen your books. Imagine the books are approved by board of directors. They're already approved by board of directors, audited, given to shareholder. Now, this is reopening on court or tribunal's order. Now, when will court or tribunal tell you to reopen? Whenever they feel that the accounts are prepared in a fraudulent manner or the affairs of the company were mismanaged, which cast a doubt about the reliability of financial statement. Either they are prepared on fraudulent manner or the affairs of the company were mismanaged, which is casting a doubt on reliability of financial statement, then the court or tribunal can order you to reopen the books and change it. So reopening and then changing it, recasting. This is only when they order, and they can order you to reopen the books of account for maximum preceding 8 years because the books are kept for 8 years. If the CG had ordered you to keep it for more than 8 years, then they can also tell you to open the books for more than 8 years also. So this is on court or tribunal's order. Next one is voluntary revision. We revise the financial statement or BOD report. After preparing financial statement, after preparing BOD report, if we feel some error is there, if we have done some error and we want to rectify it, so then this is applicable, voluntary revision of financial statements. Now, see, if small error is there, no need to revise the financial statement. But if something big is there and you want to revise the financial statement, yes, you can do it. Whenever you're revising financial statement, again it will be approved by BOD, again audited, again adopted by shareholders. Okay, if it appears to the directors that the financial statements does not comply with section 129, BOD report does not comply with section 134, they can apply to tribunal. We can apply to tribunal to allow us to revise it. And that voluntary revision is possible only for a maximum last 3 years. Okay, if court or tribunal directs, it's for last 8 years. If we want to voluntarily revise, it's only for maximum 3 years. Next, section 132, NAFRA. Constitution of NAFRA, that's National Financial Reporting Authority. National Financial Reporting Authority. What will be the role of NAFRA? Why is the NAFRA constituted? The CG has constituted NAFRA. Now, NAFRA will give recommendation to CG on formulation, adoption of accounting standard, auditing standards. Okay, if you just recall the definition of accounting standards, auditing standards under Companies Act. Okay, accounting standards are the standards of accounting. Accounting standards are the standards of accounting recommended by ICI, prescribed by central government in consultation with NAFRA. Auditing standards are the standards of auditing recommended by ICI, prescribed by central government in consultation with NAFRA. The NAFRA will give recommendation to CG for laying down formulation of accounting auditing standards. Second, it will monitor and enforce the compliance with accounting standards and auditing standards. It will see whether the companies and auditors are following accounting standard, auditing standards. It will monitor. It will oversee the quality of services of the professional. It will see whether the chartered accountants are following auditing standards properly and the way they are doing audit is proper or not, and such function as are related to ABC above. In simple words, this is the role of NAFRA. They will try to recommend to CG formulation of accounting standard, auditing standard. They will monitor and enforce whether companies are following accounting standard, auditors are following auditing standard. And they will also oversee the quality of services of the chartered accountant, and they can also take actions against chartered accountants. Okay, this is the role of NAFRA. Now, whether NAFRA rules are applicable to all companies, answer is no. Whether NAFRA rules are applicable to all companies, answer is no. This is new thing. So as per the NAFRA rules, the above thing, whatever are the powers of NAFRA or role of NAFRA, that's not for all entities. It's only for few. Kiske liye? So NAFRA rules apply to whom? This is important. 1. Company whose securities are listed whether in India or outside India. Second, unlisted public company, paid up capital 500 crores or more, annual turnover 1000 crores or more, outstanding loans, debentures, deposit 500 crores or more, and this you have to see of last year. Okay, if you just see, NAFRA applies to big companies, not small. The big ke liye. Plus, insurance company, banking company, electricity company, for them NAFRA applicable. Any body, corporate, company, person, any body, corporate, company, person, individual, or even a partnership firm, unko bhi NAFRA is applicable if a reference is made by CG. So CG says this partnership firm ko, you check it, then that partnership firm is also covered under NAFRA. This is if reference is made by CG. And last, a body corporate incorporated outside India. Okay, there's a company incorporated outside India which is a material subsidiary or associate of a company registered in India. If it is a subsidiary associate of a company registered in India and it's a material one, material means the revenue coming from there is exceeding 20% of consolidated income, or the net worth coming from them exceeds the 20% of consolidated net worth. Okay, the NAFRA rules apply to whom? Listed, unlisted, paid up capital 500 crores or more, turnover 1000 crores or more, outstanding loans, debentures, deposit 500 crores or more last year ka. Banking company, insurance company, electricity company, and those which have their formats given in their own act. Next, we have it applies to anyone which is referred by CG to NAFRA. So CG ne refer kiya to that all entities, even including an individual also. And any body corporate outside India, registered outside India, if it's a material subsidiary or associate of an entity covered above, Indian entity covered above, unke material subsidiaries and associates which are abroad, to them also it is applicable. Clear with this? Next, every body corporate other than company. See, if it's a company, company will file ADT 1. Other than company, anyone covered under NAFRA, they need to inform to NAFRA within 15 days once they appoint the auditor. So once they appoint the auditor, they need to inform to NAFRA by filing form number NAFRA 1. Company hogi, they would have already filed ADT 1. That's why this is not required. And every auditor shall file a return with NAFRA. Every auditor, including company ka auditor, including company's auditor, they to file a return with NAFRA on or before the 30th November every year in form number NAFRA 2. This NAFRA is important. And non-compliance is penalty. Okay. So where professional or other misconduct is proved, I told you NAFRA has a power to penalize auditors now. If professional or other misconduct is proved, penalty. If individual is appointed, minimum penalty is 1 lakh. It can extend to 5 times the fees received for individual. And firm hai, minimum penalty 5 lakh. It can exceed to 10 times the fees received for a firm, individual and firm. And they can also debar you. They can debar the firm from being an auditor. How much time ke liye they can debar? For a period of 6 months up to 10 years, as may be determined by NAFRA. So individual penalty is 1 lakh, maximum is up to 5 times your fees received. Firm is minimum 5 lakh, maximum is 10 times the fees received, and they can debar you for minimum 6 months to up to 10 years ke liye. Done? This was section 132 NAFRA. 133 is CG has a power to prescribe. CG prescribes accounting standard. So as per section 133, CG has prescribed the accounting standard. Accounting standards are the standards of accounting recommended by ICI, prescribed by CG in consultation with NAFRA. Next is 134. It's signing of financial statement and BOD report. Two things. Now this is signing of financial statement for and on behalf of board of director. We say board of director approves the financials. Okay, on behalf of board of directors, few directors sign, not all. Few directors will be signing on behalf. So sir, who has to sign the financial statement on behalf of board of director? Chairperson or 2 directors, out of which one shall be a managing director. The chairperson, chairman of the board of director, or 2 persons, 2 directors, out of which one shall be a managing director, if any. And now this is and a CEO, CFO, company secretary, CEO of the company, CFO of the company, company secretary of the company, they have to mandatorily sign the financial statements. Okay, now financial statements ke saath audit report will always be together. It's attached and then it's given to the shareholders. Theek hai. Now board report. Second is board report. Now see, as an auditor, we don't have to prepare board report. We don't have to audit BOD report. We don't prepare it. We don't audit it. As per SA 720, we have to go through the audit report. We go through the things which are a part of annual report to find the material inconsistency. That's as per SA 720. But now we don't prepare board report. We don't audit BOD report. So their content of BOD report is not relevant for us. Content of BOD report is not relevant for us. See, we audit financial statement, anything which is annexed thereto. Annex means which is a part of it. Board report is not annexed, it's attached to the financial statement. Attached means just presented together. We audit financial statement, anything which is annexed thereto. Annex means which is a part thereof. Attach means which is just presented together. Okay, so BOD report ke content is not relevant for us. We have just skipped it. One of the content of BOD report is director's responsibility statement. Just one of the content is director's responsibility statement. So this is also not relevant for exam purpose. I'm just skipping it. Okay, next is section 138. Now, sir, what is 135, 136, 137? 135 is CSR, Corporate Social Responsibility. We have a chapter in FR. 136, 137 are basically related to whom the financial statements are to be given. 136, to whom the financial statements are to be given, and the financial statements are to be filed with ROC within how many days? So once they are approved at an AGM, once they are adopted at an AGM, within 30 days they are to be filed with ROC. Once they are adopted at an AGM, within 30 days they are to be filed with ROC. For audit angle, that sections are not relevant. That's why they have been omitted. Law may you might be having it. Okay, next one is section 138. There's a question from Bala. The only auditors auditing companies under NAFRA are covered or all? See Bala, NAFRA rules are not just to companies. We have seen that it can be for a body corporate, individual, firm. If it is referred by central government to NAFRA, they are also covered. If they are covered, unke auditors gets covered. So those companies which are covered under NAFRA, their auditors are also covered under NAFRA. And if I am doing audit of such entities, then only I am covered under NAFRA. So NAFRA can penalize that auditors only, not all auditors. Okay. Next, section 138, internal audit. Okay, internal audit is an audit conducted on behalf of management. Yeah, it's an audit conducted on behalf of management that assist the management in fulfilling their objective. We know there are so many responsibilities or objectives of management, like timely preparation of financial statement, prevention detection of frauds and errors, selecting proper accounting policies, applying them consistently, making estimates and judgments which are prudent. They are all responsibilities of management. Internal audit is an audit conducted on behalf of management. It helps the management fulfill their responsibility. Now, sir, whether this internal audit is mandatory for all companies, answer is no. It's applicable to 1. Listed, unlisted public company having a paid up capital 50 crores or more, turnover 200 crores or more, outstanding loans or borrowings 100 crores or more, and public deposits 25 crores or more. And so these limits are to be seen of which year? Last year. Limits are of last year to be seen. If last year these limits are crossed, this year internal audit is applicable, and any of them. Beech mein word is or. This is unlisted public company. Listed one, don't see the limit. Unlisted mein, these are the limit. Now, private company mein paid up capital limit is not given, and outstanding public deposits is not given because they can't have public deposits. Okay, so there are only two limits: turnover 200 crores or more, and loans and borrowings from banks, financial institution is 100 crores or more at any point of time. So then internal audit is applicable. Okay, if internal audit is applicable, who will appoint the internal auditor? Again, BOD will appoint. Audit committee recommends, BOD will appoint. So BOD will appoint the internal auditor. And sir, he will report to whom? He will report to board of directors only. Now sir, would he be a chartered accountant? Not necessary. He can be either a chartered accountant or a cost accountant or such professional as is decided by board of directors. And if he's a chartered accountant, sir, should he be holding COP? If he's a chartered accountant, should he be holding COP? Not necessary. As per Companies Act, he may or may not be holding COP. But if I go to Chartered Accountants Act, if you want to be an internal auditor also, you need to hold COP. Because Chartered Accountant Act says, a person who is not holding COP cannot do the work which is generally done by a person holding COP. The chartered accountant not holding COP cannot do the work which is generally done by a chartered accountant holding COP. The internal audit is generally done by a chartered accountant holding COP. If you don't hold COP, you can't do it. But our Companies Act they say you may hold COP, you may not hold COP. Clear with this? And the limits have to see of last year, not last 3 years, just the last year. So this question may last year the turnover is 200 crores. As last year turnover is 200, the word written was 200 or more. Is internal audit applicable? Answer is yes, it's applicable. And our internal auditor may be your employee also. It's not necessary that he should be a separate practicing CA. He may be your employee as well. Clear with this? Question from Bala. So CA working with a company, can he be internal auditor? Answer is yes. Sir, whether COP required for it? Answer is no COP required for it. No COP required because you are working only for that company, but that employee cannot do internal audit of some other companies. That employee cannot do internal audit of some other companies. Did you understood? Next, section 123 to 127 related to dividend. Section 123 to 127 related to dividend. Okay, section 123. Section 123. Now they say that dividend can be declared either out of current year's profit after providing depreciation. See the word written, either current year profit after providing depreciation or out of past profit. Past profits, what you are having after providing depreciation, past profits might be lying in your P&L retained earning or might be lying in some free reserves, general reserve, kind of that. Either it's lying in P&L retained earning or are lying in general reserves, past profit, but they should also be after providing depreciation. And third, it can be out of the money given by central government, but CG will give money only to government companies, and that too where they've given a guarantee. If CG has given a guarantee of some minimum dividend in a government company, then it will be there. Private companies it will not be there. Okay, now they say that dividend can be declared only out of what? Current year's profit after providing depreciation. Question is, can I use capital profit for declaring dividend? Can I use capital profit for declaring dividend? Now, they don't say that revenue profit or capital profit. They say current year's profit. So, sir, whether capital profit can be used for declaring dividend? Capital profit which has gone in capital reserve. Like profit on amalgamation. Amalgamation, the profit goes in capital reserve. Profit on internal reconstruction, it goes to capital reserve. That cannot be used. But capital profit which goes in P&L, profit on sale of fixed asset, profit on sale of investments, that profit is also a capital profit, but it goes in P&L. That can be used subject to 3 conditions. Which 3 conditions? Article of association allows. Number 2, it is realized in cash, and third, it remains after revaluation of other assets and liabilities. So capital profit which has gone in capital reserve cannot be used. Capital profit which has gone in P&L can be used subject to 3 conditions. Now, second question, sir, do I need to write off the past losses before giving dividend? If I have some past losses, do I need to write off the past losses? Answer is no. You don't have to write off the past losses. You need to write off unabsorbed depreciation of past. The word written was it should be after providing depreciation. Did I say after writing off past losses? No. I don't have to write off the past losses, but I have to write off, I have to deduct unabsorbed depreciation of past. Now, sir, how do I find the unabsorbed depreciation? So unabsorbed depreciation is nothing but loss for the year or depreciation for the year, whichever is lower. Loss for the year or depreciation for the year, whichever is lower. For simple example, profit was 2, depreciation is 10. Profit was 2, depreciation 10. So after that, the profit became negative 8. Before depreciation was 2, depreciation 10. Now it became negative 8. So unabsorbed is 8. 2 profit tha, depreciation 10 came, so unabsorbed is 8. So I can say loss for the year or depreciation for the year, whichever is lower, absolute term. So 10 or 8, whichever is lower is 8. Deduct unabsorbed depreciation of past, not the full accumulated loss. Clear with this? Okay, then they are telling whenever you are declaring dividend, dividend has to be declared either out of current year's profit, past profit, which are lying in free reserves. Either it's lying in retained earnings, PNL, or they are lying in free reserves. Other than free reserves cannot be used. Before declaring dividend, do I need to transfer anything to some reserve? Like, do I need to transfer a profit to general reserve and then balance I can use for dividend? So they say you may. Before declaring dividend, you may transfer a part of your profit to some reserve and then declare the balance profit as dividend. For example, in case of a bank, out of your profit, 25% you transfer to a statutory reserve. Profit may say 25% is transferred to a statutory reserve, balance 75% can only be used for declaring dividends. याद आया बैंक में? So same way they're telling, Companies Act mein word written is may. If some other act wants you, you may do it. Otherwise, it's not required as per Companies Act. Okay, if at all I don't have a profit, I can use past profit. I don't have a profit this year, I can use past profit. Past profit lying in PNL, no restrictions. Past profit lying in general reserve. Past profit lying in general reserve, I can use subject to 3 conditions. There are 3 restrictions. Sir, which are the 3 restrictions? Past profit lying in general reserve. 1. Rate of dividend should not exceed the average rate of dividend of last 3 years. Number 2, the amount which you can use should not exceed your 10% of paid up capital plus free reserves. And number 3, the balance in free reserves should not go down less than 15% of paid up capital. Don't empty the reserves. If past profit is lying in PNL, no restriction. But if past profit is lying in general reserve, I can use it subject to 3 conditions. Clear with this? Now, interim dividend. Interim dividend you cannot declare out of free reserves. Interim dividend either has to be out of current year's ka profit, जो profit है उसमें से, or out of past profit lying in PNL or retained earning. Past profit lying in PNL or retained earning. You cannot use general reserve for interim dividend. Okay, sir, what if I've incurred losses in this year? If I've incurred a loss in current year, I can give interim dividend out of past profit lying in PNL or retained earnings. Usme se you can give it, but the dividend should not exceed the average rate of dividend in last 3 years. Did you understand this? Okay, next, dividend once declared, you're required to pay off within a period of 30 days, but after declaring within 5 days, you have to keep it in a separate bank account. Once you declare dividend, within 5 days, you're required to keep it in a separate bank account. And dividend has to be paid in cash only. If I declare a dividend and then I say I give you shares, that's not allowed. I declare dividend, then I say I give you shares, that's not allowed. And if you're defaulted in section 73-74 related to public deposits, you cannot declare dividend. Okay, dividend out of past profit, I already said 3 conditions are there. Next, dividend out of capital profit, I already said allowed subject to 3 conditions. But if it has gone in capital reserve, not allowed. If it has gone in PNL, allowed subject to 3 conditions. Now, this was 123. Dividend once declared, you're required to pay within 30 days. Sir, what if I'm not able to pay within 30 days? Okay, if you're not paying due to your fault, penalty under section 127 applies. But if you're not paying due to shareholder's fault, like shareholder has changed his bank detail, you don't have the revised bank detail, old bank account is closed. You transfer money in bank account, money is coming back. What do I do in that case? In that case, once 30 days are over, within next 7 days, you have to keep it in a separate bank account. Yeah, you transfer it. It's already there in separate bank account. Keep it in another separate bank account named as unpaid dividend account of ABC Limited or whatever is the name of company. Once 30 days over, within 7 days, transfer it to that. If you transfer late in that unpaid dividend account, transfer it with interest at 12% per annum. If you transfer late to unpaid dividend account, and whichever dividend you could not pay to shareholders, you transferred to unpaid dividend account, you put a detail of it on your website. Yeah, you have to put a detail of it on your website within 90 days of transferring it to unpaid dividend account. Once I transfer to unpaid dividend account, I have to put the details of the names of shareholder whose dividend I have transferred to unpaid dividend account within 90 days of transferring it to unpaid dividend account. Now, sir, what would I do with the money lying in unpaid dividend account? Keep it. Whenever shareholder claims, you give it back. Sir, what if shareholder doesn't claim? After 7 years, give it to IPF. After 7 years, you give it to IPF, and when you are transferring it to IPF, you need to fill a form called as form number DIV5. Now, sir, what's IPF? It's a fund established by central government. It's basically those dividend which remain unclaimed will go over there, not just dividend. Imagine matured debentures, matured public deposit. If public is not taking, they will keep it in a separate account for 7 years. After 7 years, it will be given to IPF. IPF will use this fund for investor education and protection. The name only says investor education and protection. And IPF audit will be done by C&AG and his team. C&AG and his team will do the audit of IPF. Now I have a question. Dividend which has gone to IPF, can I claim my dividend from IPF? I woke up after so many years, oh, my dividend is pending. Can I claim my dividend from IEPF? Answer is yes, you can claim it from IEPF as well. Any person claiming to be entitled may apply to the authority, constituted under the fund. You can apply to IEPF also if you remember, my dividend is pending. That is also allowed to you. TK, this was IEPF. Audit is done by C&AG and his team. This was section 125. Now section 126, bonus dividend right kept in abeyance. Abeyance means on hold. Now, when the person entitled for dividend bonus right is not sure, like suppose a person holding shares expired. Now there's a fight going on, who is the legal executor? Person holding share expired, the fight is going on, who is the legal executor? Now dividend declared. The company will pay dividend to whom? Legal executor, but sir, fight is going on. So the company will keep that dividend on hold. If bonus comes on it, company will keep it on hold till the time the legal owner is decided, will keep it on hold. That's called as abeyance. Next, if company doesn't pay dividend within 30 days due to company's fault. Okay, if it is due to company's fault, you are not paying in 30 days, you are paying late. If you pay late, you have to give 18% simple interest to the shareholder. Shareholder, I am paying late, 18% simple interest I have to pay to them. If I transfer late to unpaid dividend account, I have to transfer it with 12% interest. वो unpaid dividend account था. This is if I pay dividend late to shareholder, my fault, 18% interest I need to pay to them. Plus, all my officers or employees which are in default, उनके लिए penalty 1000 rupee per day plus 2 years of imprisonment. I won't be liable to pay the penalty if, why? The dividend is not paid due to operation of law. Court told me not to pay it. Then, second, shareholder has given a direction which I cannot comply, and I already told him, sir, this way it's not possible, and I kept it on hold. Third, there's a dispute going on. Fourth, it's lawfully adjusted against the debt due by shareholder, and any reason not due to the fault of company. Then in that case, we are not liable to pay penalty. Now, whenever dividends are to be paid, we need to update our register. So who is entitled for dividend? We need to update the register of members, debenture holders. We are allowed to have a closure. We can close the register and we can update the register during that time. So close the register of members and debenture holder, maximum allowed for 45 days in a year, not exceeding 30 days at a stretch. Not exceeding 30 days at a stretch. Okay, question. Do I need to create provision for proposed dividend? Dividend is proposed. Do I need to create a provision for proposed dividend? No. The entry for dividend is done only when the dividend is declared. When dividend is proposed, no entry. When it's declared, P&L to dividend payable. And when you pay, it's dividend payable to bank. Okay. Important is verification of dividend. Mark that as important. In the whole dividend wala point, this is the most important. As an auditor, how do we verify dividend? We just have to write all these sections. So one, we need to check out the dividend is out of the profit which is allowed as per section 123. We need to check the depreciation given is as per schedule 2. We need to see the board resolution for recommending dividend. We need to see shareholders resolution declaring dividend at an AGM, and it cannot exceed the dividend recommended. If recommended is 20%, board is recommended 20, shareholders can declare 20 or less. It cannot increase it. Plus, I need to see that the dividend is paid within 30 days. It was kept within 5 days in a separate bank account. It is paid out of free reserves only. And if you are using general reserve, the 3 conditions are fulfilled or not, that you need to see. Unclaimed dividend account, if it is not paid within 30 days, you transfer it to unpaid or unclaimed dividend account, separate bank account. Keep it over there. After 7 years, it has gone to IPF. Proposed dividend ki entry is not done. Entry is done only when dividends are declared. This is all the same provision. This was important. Okay, next is basics of LLP audit. Very clearly written, basics. Now, LLP. When does a LLP have an audit? Now, there's a Llp Act 2008. As per Llp Act 2008, if the turnover exceeds 40 lakh and the capital contribution of partners is exceeding 25 lakh, then they have to get the accounts audited. The turnover is 40 lakh and the contribution by partner exceeds 25 lakh. Then the audit is applicable under your Llp Act. Both things has to be satisfied, turnover exceeding 40 lakh and the capital contribution by partner exceeds 25 lakh. Then, okay, plus LLPs are required to file annual return in form number 11 with ROC within 60 days from the closure of financial year. Financial year ends on 31st March, 60 days. 30 days April, 30 days of May. So by 30th May tak they have to file this annual return. Plus they have to file a statement of account, that is their financials, and a declaration of solvency. This is to be filed within 30 days from the end of 6 months from the end of financial year. Okay, financial year ended in March, 6 months ends in September. September end हुआ, उसके बाद within 30 days. So it is by 30th October. By 30th October, they have to file their accounts along with the declaration of solvency, that they will not become insolvent within a period of 1 year. Okay. Now, appointment of auditor. Who will appoint the auditor in LLP? Designated partner. I repeat, designated partner. And the first auditor will be appointed. First auditor will be appointed before the end of first financial year. Subsequent auditor will be appointed at least 30 days before the end of year. The first auditor is before the end of first financial. Subsequent is at least 30 days prior to the end of financial. Who will appoint it? Designated partner. If designated partner doesn't appoint, other partners can appoint. Okay, next, advantages is fine. Just go to this auditor's duty. What is your duty when you're doing audit of LLP? What is your duty when you're doing audit of LLP? My duty is, first of all, this LLP Act doesn't tell me what I need to report. I need to get a clear-cut instruction what work they want from me. The Llp Act mein things are not clear. That's why you should get a definite instruction in writing what work needs to be performed. You should see report whether the records appear to be fine, all information explanation whether you obtain, are there any restrictions put on you, and you will definitely report whether the accounts are showing a true and fair view. As an auditor, you read the LLP agreement, note down the important provisions of LLP agreement. Read the LLP agreement, note down the important provisions like the nature of business, capital contributed, interest on capital is how much, drawings allowed is how much, interest on drawing is how much, borrowing powers, maximum borrowing, rights and duties of each of the partners, profit sharing ratio. This all you can read the LLP agreement, and based on that you can understand it. Plus any meeting of partners which is related to books of accounts, any decisions taken relating to books, that all is also to be referred by you. Refer the minutes book for any resolution passed relating to accounts. Done. This was your chapter of company audit. Oh yeah. Now let's go to schedule 3. Now let us go to schedule 3. Chalo, I'm doing division 2, not the division 1. Directly open division 2 of schedule 3. Yes, in our normal batch, this would have taken around 20 hours. We are done in 2.5, 3 hours. Match na today. There's a final between New Zealand and Australia. New Zealand is playing very well. I saw the score lastly. It was 148 for 2 wickets. Pata nahi fir. Chalo, let's go to schedule 3. We'll be doing it very fast. It's division 2. Directly division 2. Division 1 is fine. Exam angle not relevant. Division 1 is for companies following AS. Division 2 is for those companies following Ind AS. Division 3 is for NBFCs which are following Ind AS. We are doing division 2. This is for the companies which are following Ind AS. Now, if if there's a conflict between schedule 3 and Ind AS, if there's a conflict between schedule 3 and Ind AS prevails. The requirement of this schedule stands modified. So Ind AS will prevail if there's a conflict between Ind AS and schedule 3. Okay, next. Next question. This is important. Pay attention. We can have a rounding off, like rupees in lakhs, rupees in millions, rupees in crores. Question, is it mandatory to have rupees in millions, lakhs, crores, or can I show full figures? Can I show full figures, or mandatory there has to be a rounding off? Mandatory or not mandatory? M or N? Mandatory, not mandatory? M or N? Can I show full figures? Or is it mandatory to round off? It is mandatory to round off under division 2. I repeat, division 2 may it's mandatory to round off. Division 1 may not mandatory. Check. Depending on turnover, the figures shall be rounded off. So can I show full figures? Answer is no. There's a question on this. Can I show full figures? Answer is no. There has to be a mandatory rounding off. If your turnover is less than 100 crores, it should be nearest 100, 1000, lakhs, millions. But if your turnover is 100 crores or more, it's nearest lakhs, millions or crores. That way rounding off is mandatory. Clear with this? Okay, and the things which we learn in schedule 3, they are the minimum disclosures which are to be required on face of balance sheet, P&L, statement of changes in equity, or in your notes. These are minimum. Can I have extra disclosures? Answer is yes. These are the minimum requirements. Okay. Now, coming to the format of balance sheet, under division 2, the balance sheet starts with asset and then comes your equity and liabilities. Under your asset, I just take the few important ones which are kind of there. Your deferred tax always will be coming net. DTA, DTL. DTA comes under your non-current asset. DTL comes under your non-current liability, but we have to present them net. That is to be remembered. There's a heading called financial asset, financial liability. Under current asset, non-current asset, there's financial asset. Under current liability, non-current liability, there's financial liability. You already done Ind AS 109. So what are financial asset, financial liability? You get it under 109. Okay. Your bank balance, cash and cash equivalent, is divided in two parts. One is cash and cash equivalent, second is other bank balance. The one which will be used in cash flow comes in cash and cash equivalent. One which is not to be used in cash flow will go under other bank balance. For example, FDs up to 3 months. FDs up to 3 months, they come under cash and cash equivalent. FDs for more than 3 months, they come under your bank balance other than 3 above. So FDs for more than 3 months, they are not covered for cash flow purpose. They will be covered under your point number 4 over here. Okay. Plus, there's a new thing which will be on the face: current tax asset, current tax liability. Okay, both are deferred tax. This is current tax. What is this current tax asset, current tax liability? Okay, we have a provision for tax, we have an advanced tax. If advanced tax is more than provision for tax, it's current tax asset. I repeat, advanced tax is more than provision for tax, current tax asset. If provision for tax is more than advanced tax, it's a current tax liability. And we have a net. The net of advanced tax. If advanced tax more, it appears here. If provision for tax is more, it will appear under liability. Current tax asset, current tax liability will come under your current asset, current liability. Okay, under your capitals, you have equity share capital. Preference share capital is a part of a liability under your division 2. That will be a part of financial liability. So if it's a convertible preference share, convertible compound financial instrument, we bifurcate into two parts. Which are the two parts? Equity component, liability component. Equity component comes under this other equity. Liability component will go under your financial liabilities. Okay, the equity share capital. Other equity is nothing but similar to your reserves and surplus, and it will also include that equity component of compound financial instrument, application money received pending allotment. Then we have basically money received against share warrant. They all will come under your other equity, and plus OCI balances. So OCI balances. There are few items which comes in OCI. We'll come to P&L, we'll understand. There are few items. Normal P&L is divided in two parts. The P&L is divided in two parts. The normal P&L and below the OCI. OCI wale current year effect comes there, accumulated under other equity. Accumulated under other equity. Okay, next, trade payables, you have to bifurcate. Trade payables, you have to bifurcate dues to micro and small enterprise, not micro, small and medium. It's not MSME. Micro, small, medium nahi, it's just micro and small. Dues to micro and small other than micro and small. That way the bifurcation is required on the face. Okay, this is done. Okay. Next, statement of changes in equity. This is only under Ind AS. This is not under AS. This is only under Ind AS. Statement of changes in equity. We have two things. One, statement of changes in equity share capital. Statement of changes in other equity. Changes in equity share capital is balance at beginning, change and closing. And next is basically your other equity. Other equity may, it's if you just see the table. If you just see the table, I have it like kind of basically in a different way. So if you just see the format, I'm just taking first of all the horizontal line. Horizontal line, you have application money received pending allotment, equity component of compound financial instrument, your reserves and surplus, the name, and then the OCI wale parts. All the OCI wale parts, uske accumulated balances. This is horizontal. Now I go to vertical. Opening. If policy is changed, we give a retrospective effect. Uska effect is given. We have a restated opening. Plus current year is added. Dividend declared or any appropriations, they are deducted. And then we have a closing balance. This is how basically the statement is prepared. So we show the statement of changes in equity share capital, statement of changes in other equity. Okay. Now, what is a current asset? What is a current liability? The current asset is an asset which satisfies any of the following criteria. Any of the following criteria. It's expected to be realized or it's intended to be sold or consumed within company's normal operating cycle. Anything which will be realized in normal operating cycle, it's always current asset. Number 2, it's primarily held for being traded. Number 3, it is expected to be realized within 12 months from the reporting date. And 4th, if it is cash or cash equivalent, it's always a current asset unless it's restricted from being used to settle a liability for a period at least 12 months after the reporting date. Okay, example over here. Example over here, pay attention. If there is a FD done which is cancelable, all cancelable FDs are always cash equivalent. All cancelable FDs, they are always cash and cash equivalent. They will always be a current asset. But a non-cancelable FD, if it is not cancelable for 12 months after the reporting date ke 12 months के बाद भी not cancelable, then they will not be a current asset, they will come under your non-current asset. And if question is silent, assume the FDs are non-cancelable. I repeat, if question is silent, assume the FDs are non-cancelable. The non-cancelable up to 3 months wale cash and cash equivalent, 3 to 12 months is other bank balance, non-cancelable for more than 12 months. Non-cancelable for more than 12 months, other financial asset under non-current asset. Other financial asset under non-current asset. Okay, this is your current asset. All others are non-current asset. Current liability is fine. Okay. Under your non-current asset, we have PPE. PPE ke andar one thing, the bearer plant. The bearer plant are a part of PPE. Bearer plant. Other than bearer plant, we have a separate heading on face. Bearer plant comes over here. Other than bearer plant, we have a heading on the face of balance sheet. Achha, just one more thing. Just go to the definition of current liability. Just go to the definition of current liability. Okay, if I ask you a question, there is a liability which is due within 12 months. There's a liability which is due within 12 months, but I know I won't be able to pay it and I'll be able to pay late only. It is due within 12 months, but I know I'll be able to pay late only and I'll be paying after 15 months. It's due within 12 months, due after 10 months, but I will be paying after 15 months. Do I classify it as current or non-current? So to classify it as current or non-current, asset में word था expected to be realized. Asset में word है expected to be realized. Due in 10 months, expected to realize in 15 months. Due है 10 months में expected to be realized in 15 months. It's a non-current asset. But liability mein word is due, not expected. This is something interesting. Liability mein word is due, not expected. If it is due in 10 months, it's a current liability. Don't see when you're expecting to pay. So asset mein word is expected. Liability mein the word is due. Did you understood this? See, this is the way they can make the paper trickier. Okay, next. This is done. Assets under lease are to be shown separately. That's okay. Okay, investment property. Investment property now appears on the face of balance sheet. Earlier it was a part of long-term investment. Earlier it was a non-current investment. Now it comes on the face. Okay, whether we can provide depreciation on investment property? Answer is yes. We can give depreciation on investment property. ASME it was not there because ASME it was a part of non-current investment. Okay, baki things are fine. Biological asset other than bearer plant, they come on the face. They come on the face of balance sheet. Okay, there's a separate heading for that. Under your investments, I just go down. If there's an investment in subsidiary, associate, JV, they are to be always shown separately. Plus, investments, once you are done, you have a bifurcation, equity, preference, you have then debentures, bonds, government securities. Total आ गया. Total के बाद, how much is quoted, how much is unquoted? How much is quoted investments, how much is unquoted, and quoted investments also give the market value thereof. So once you get the total, after that, aggregate quoted how much, aggregate unquoted how much, and the quoted also you need to give the market value of it. Okay, next you have your debtors. Under your division 1, under division 1, you are bifurcating debtors as outstanding for more than 6 months and others. One which is outstanding for more than 6 months from the date they became due for payment and others. Such bifurcation is not required under Ind AS. Ind AS mein outstanding for more than 6 months and others is not required. You just have to bifurcate as trade receivables which are considered good, so secured good, unsecured good. So good ke andar secured, good ke andar unsecured. That is 2. Now doubtful is now divided in 2 parts. Under AS, it was doubtful. It was secured, considered good, unsecured, considered good, and third was doubtful. Here, instead of doubtful, we have 2 categories. Trade receivable, which have a significant increase in credit risk, and trade receivable credit impaired. Now, what is significant increase in credit risk? Significant increase in credit risk is they are overdue for more than 30 days. That's given under 109, Ind AS 109. If they're overdue for more than 30 days, we say there's a significant increase in credit risk. Overdue for more than 30 days, it's a rebuttable presumption that they are having a significant increase in credit. Credit impaired means pata hi pakka bad debt hai. It's kind of pakka bad debt. That's called credit impaired. So one is significant increase in credit risk. They are overdue for more than 30 days, but usme it's not visible ke bad debt hoga. This second one, credit impaired, it's very visible. There will be bad debt. Did you understood? Okay. This is basically the thing. Loans. Now see, the word is loans, not loans and advances. Under AS, we used to have a heading called loans and advances. In AS, why it's only loans? Advances don't come under financial asset. Loans are a part of financial asset. Advances, I've given an advance. I don't have a right to receive cash. I give advance for purchase of goods. I'll be getting goods. I give advance for some money expenses. I'll be getting some services. The advances don't come under your financial asset. The advances will be a part of other current asset or other non-current asset. Repeat, advances will be part of other current asset or other non-current asset. This is only loans. Next, if bank deposits with more than 12 months maturity will come under other financial asset under non-current asset. Non-current asset ke andar other financial. I told you, if question is silent, any FDs are there, they are treated as non-cancelable. Non-cancelable FD, cancelable always they are cash and cash equivalent. But if nothing is given, they treat it as non-cancelable. Non-cancelable up to 3 months is cash and cash equivalent. 3 to 12 months is other bank balance. More than 12 months, non-cancelable will come under your other financial asset, under your non-current asset. Okay. Other non-current asset, your advances. So advances are a part of other non-current asset or other current asset. That is advances. Loans will be under your financial asset. Next, inventory is fine. Inventory mein one thing. If inventory is in transit, that is to be shown separately under the relevant head, like raw material in transit, finished goods in transit, show separately. Don't have all goods in transit together. Raw material in transit separately, finished goods in transit separately, loose tools in transit separately. You have to have it separately under the relevant subhead. Did you understand the word? Under the relevant subhead. Again, this is current investment, that's fine, similar. This is trade receivable, that's fine. Okay, cash and cash equivalent. Cash and cash equivalent, balance with bank, checks and drafts on hand, cash on hand, others, that's fine. Loans is fine. Okay, just one more thing. Under your cash and cash equivalent or other bank balance, earmarked balance with bank. Any money lying with bank for a specific purpose, like unpaid dividend account, that you can use only for payment of dividend, that is to be shown separately. Okay, balance with bank to the extent of margin money deposit, like I took a loan or bank has given a guarantee for me, against that I made a FD against which bank has granted me a loan or against which bank has given a guarantee on my behalf, that is to be shown separately. And if at all there's a money in my bank account which I cannot use, repatriation restriction, bank account is seized, Vijay Mallya's account, that repatriation restrictions are always to be shown separately. Clear with this? Okay, Baladeep has a question, sir. Will question give us such bifurcation? See, in your FR paper, there will be a questions where to show that particular item. So Schedule 3 ka question comes in FR also, Schedule 3 question comes in auditing also. But they will not ask you now, give the disclosures of equity share capital, give the disclosures of trade receivable. That way question will not be there. It will be a practical type question wherein this will be there. Like I tell you, there was one question asked. We have a raw material in transit and we have some stores and spares in transit. Company has shown an aggregate value of goods in transit in inventory. Company has shown an aggregate value, goods in transit in inventory. Is it correct? Answer is no. Raw material in transit will be separate and stores and spares in transit will be separate. So that is to be basically seen. The word written was very clearly under the relevant subhead. Under the relevant subhead, that is to be interpreted. Did you understood? So wherever questions come now, I am just taking that all point. I'm taking all that point where the questions can come. Similarly, I took a question where current asset may its debtors are due within 10 months, but I'm expecting I'll get in 15 months. They are non-current. Creditor due in 10 months, I'm expecting I'll pay in 15 months. They are current. तो वहां पे word due था, asset में word was expected था. I hope you're getting it. Okay, next one is your equity share capital. This is fine. Equity share capital is a normal one. Other equity is also fine. Under your borrowings, okay, under your borrowings, liability component of compound financial instrument, liability component of compound financial instrument, they will come under your borrowing. Yahan pe equity component will go under other equity. Okay, Sakshi has a question, so spare part will come under Ind AS 16 PPE. See, stores and spares which meets the definition of PPE, they go in PPE. Those which do not meet the definition of PPE, they will come under inventory. So there are some stores and spares which are of repetitive use, life is less than 1 year. Unka stock, that will come under your Ind AS 2. But stores and spares which has a life more than 1 year, and that all will be falling under your PPE. It can come at both the places. Okay, next. I'm just trying to see where questions can come. Okay, next we have this other financial liability. Most of the items which are coming under other current liability, most of the items which are coming under other current liability, now they have come under other financial liability. Like we have a loan of 5 years, remaining period is 6 months. We have a loan of 5 years, remaining period is 6 months. Now that will be a current liability. Loan of 5 years, remaining period is 6 months. That will be a current liability. It will come under other financial liability. Under current liability, financial liability. Under that, other financial liability. Current maturity of long-term debt. Same way, current maturity of finance lease obligation. Finance lease में lease rental payable within 12 months will come over here. Lease rental payable within 12 months. Okay, application money received pending allotment normally comes under other equity. Application money received pending allotment comes under other equity, but application money received pending allotment which is due for refund, excess application money received, I know I have to refund it, that will come under your other financial liability, under your current liability. Okay. Now, other current liability, what it is there? Other current liability, what is there? Income received in advance. Okay. See, income received in advance, I have to give them goods. I don't have a contractual obligation to pay cash. If I have a contractual obligation to pay cash or cash equivalent, it becomes a financial liability. I repeat, if I have a contractual obligation to pay cash or cash equivalent, it becomes a financial liability. But यहाँ पे revenue received in advance, I have to give them goods, not the cash. It doesn't come in financial liability, it's other current liability. Okay, next, your amount which you have to pay to micro and small enterprise, they have to be basically uske related some disclosures are there, 5 disclosures are there. That's okay. Inter level it's important, final level not much important. Inter level it's important, final level it's not much important. Final level they will ask basically questions from a point, not the full disclosure. Okay, contingent liabilities and commitments are to be disclosed in notes to account. Contingent liability and your commitments. See, example of commitment is, I've entered into a contract to purchase fixed asset from someone in future. I've entered into contract to purchase fixed asset from someone in future. Okay, as of today, fixed asset not yet purchased, it's not a liability today. They've not given fixed asset, so it's not a liability today. Okay, is it like it may come, may not come in future? It will come in future. It's not a liability today. It's not a contingent liability. May come, may not come. No, it will come. That's why it's a commitment. That's why it's a commitment. Commitments are also to be disclosed in your notes to accounts. Next, dividend. Okay, proposed dividend, we don't make entry. Proposed dividend, we don't make entry, but the amount of proposed dividend and the per share amount total and the per share proposed dividend, it is to be disclosed in notes to accounts. It is to be disclosed in notes to accounts. Okay, now under your Ind AS, whenever you are changing your accounting policy or whenever you are rectifying the error which was done in past, accounting policy change, error rectified, or when you reclassify the things, like earlier we had shown wrongly under something, we have to reclassify the things, then the effect, I give it at beginning. Uske liye whenever I'm doing this, I need to prepare 3 columns in my balance sheet. So there will be one more extra column in balance sheet beginning of previous year. So whenever I'm rectifying error or I'm doing a basically retrospective adjustment, effect relating to current year comes in current year, effect relating to previous year comes in previous year, effect relating to period before previous year, effect relating to period before previous year, it's given in beginning of previous year. Okay, preference shares, normal redeemable, plain vanilla redeemable preference shares, they come under your liability. But if preference shares are convertible, compound financial instrument, equity component will come under other equity, liability component will come under your financial liabilities. Okay, this was your balance sheet part. Now P&L. Now P&L. One thing, there's nothing like extraordinary item in Ind AS. Ind AS mein there's nothing called extraordinary, there's only exceptional. We have a profit before exceptional item and tax, we deduct tax. Profit before exceptional item, we have the exceptional item. So there's nothing like extraordinary. Ind AS 1 clearly says there's nothing extraordinary under Ind AS, only thing is exceptional. If you want to show that thing separately, it's exceptional, it's not extraordinary. Okay, in your P&L we have two parts. One is a normal P&L and below comes your OCI part, other comprehensive income. Now sir, what all thing comes in other comprehensive income? We have a related Ind AS. So all that Ind AS are telling, this comes over here. Like for example, Ind AS 16. Ind AS 16 is PP. PP says if you revalue your PP upward, you revalue a PP upward, the upward revaluation, the revaluation surplus will come in OCI. So when I revalue upward, that year effect comes in OCI. OCI means it's accumulated under other equity. OCI means it's accumulated under other equity. I repeat again. See, if there's a profit coming in P&L, from P&L it goes to retained earnings in other equity. Same way, if something comes in OCI, revaluation surplus, current year effect comes here, then it's accumulated in other equity. Next year again we did revaluation, current year effect here, opening already tha, plus something is added in other equity, that other equity will show accumulated OCI balance. Okay, the OCI mein there are two things, items which will not be reclassified to P&L, and number two is item which will be reclassified to P&L. Now sir, what is this item not reclassified to P&L and item reclassified to P&L? Item not reclassified to P&L means, see, they are the item coming in OCI today. From OCI they are accumulated in other equity. Afterwards when they are realized, like this PP is sold off, the revaluation reserve is realized, then it's removed from revaluation surplus, directly transferred to retained earning. Not reclassified to P&L means today they are not going in P&L. Future when they become realized, it will not go to P&L, it will be directly reclassified, it will be directly transferred to retained earnings. So under your other equity, it was there under revaluation surplus, remove from there, directly take it in retained earnings. Not reclassified to P&L will go directly to retained earnings. Reclassified to P&L means once they are realized, it is removed from basically other equity, it comes in SOPL. It comes in SOPL and from SOPL it will, but from SOPL. Okay, the not reclassified means directly going to retained earning. Reclassified means it will come in SOPL, normal PNL में आएगा, and from there it will go to retained earnings. Did you understood this? And the list of item which will not go to basically not reclassified to PNL and reclassified to PNL is given. Okay, so one normal PNL OCI part, total is called as total comprehensive income. Total is called total comprehensive income, and EPS is always to be shown on face of your PNL. EPS is always to be shown on your face of PNL. For continuing operations separately, discontinuing operations separately, total separately. And just one more thing, EPS is always calculated based on your normal PNL without OCI. So it is on this 13th point में normal PNL without OCI EPS is calculated. Next, which are the items coming in OCI, not reclassified and reclassified? I'm just taking the list. This is important. Items which will not be reclassified to PNL, they will go directly to retained earning. 1. Change in revaluation surplus, Ind AS 16. Next, remeasurement of defined benefit plan. This is Ind AS 19, actuarial assumption. When there's a change in actuarial assumption, there's some actuary gain loss. That actuary gain loss, it comes in OCI. From OCI, it goes to retained earning immediately, actually. From OCI, it goes to retained earning immediately, this item. Equity instrument through OCI, investment in equity. Investment in equity, if it is classified as FBT OCI. Now, investment in equity either can be FBT OCI or it can be FBT PNL. Normally, it's FBT PNL. If you choose an irrevocable option, yaad aaya? If you choose an irrevocable option, then you can have it as FBT OCI. If equity instruments are taken as FBT OCI, fair value changes will come in OCI, accumulated in other equity. When that equity shares are sold, it will be directly transferred to retained earnings. This is Ind AS 109. Next, fair value change relating to own credit risk. Okay, there's a financial liability designated as FBT PNL. There's a financial liability designated as FBT PNL. Uska fair value change normally goes in PNL. But if the fair value change is due to own credit risk, it will go in OCI and it will be item not reclassified to PNL. Later on, when that's realized, that will go directly to retained earnings. Next, if at all I have an associate JV, if at all I have an associate or a JV, we follow equity method. Now, what is equity method? Our share in post profit we add to our profits. Associate hai, JV hai. For CFS, we follow equity method. Investment appears as investment, but our share in post acquisition profits we are adding. Now, pay attention. If there is an associate JV, our share of profit I need to add. If they have a profit in normal PNL, I'll add it in normal PNL. If they have a profit in OCI, I will also add it in OCI. If they have a profit in OCI not reclassified, I will add my share in OCI not reclassified. If they have a profit in OCI reclassified, I'll add my share in OCI reclassified. Okay, this was not reclassified. Reclassified may. Your Ind AS 21 foreign operation. Foreign operation is there. You convert their figures into INR. Foreign currency translation reserve will come. Debt instrument through OCI. Investment in debentures. Investment in debt which are carried at FBT OCI. Once they are sold, that realized profit will go to PNL. Effective portion of gain loss on hedging instrument. If you have a hedging instrument classified, uske effective portion will be coming over here. That's okay. 109 mein. And associate JV my share. If they have profit in OCI reclassified, I'll add my share in OCI reclassified. Okay. Any item of income or expense, which exceeds 1% of revenue from operation or 10 lakh, whichever is higher, is to be shown separately. You can't put it under general expense or office expense. Show it separately under other expense only. Other expense may, but separately this is to be shown. Okay, whatever you spent on CSR has to be shown separately. It will come under other expense only. Other expense may separately CSR expense. Okay, if you pay to directors, directors ka remuneration comes under employee benefit. Directors ka sitting fees. To attend the meeting, they are paid sitting fees. Sitting fees will come under other expenses. Sitting fees will come under other expense. Now, how do I prepare a consolidated financial statement? In your consolidated financial statement, even though you hold 70%, you will add 100% assets liability. The opposite, there will be NCI, non-controlling interest. NCI, where does it appear? NCI will appear under equity but separately from owner's equity. NCI will appear under equity but separately from owner's equity. So we have equity share capital, other equity, that is equity attributable to shareholders or parent. Then you have NCI, then you have a total equity. So under equity separately from owner's equity. Plus, now even though we hold 70%, we include full sales, full purchase, full expense, full income of subsidiary. Simple words, we add their full profit. Now out of subsidiaries profit, 30% belongs to them. So we have added a full profit of there. So whatever consolidated mein profit comes, usme somewhat belongs to NCI. The profit we have to allocate belonging to owners of parent and NCI. Belonging to owners of parent and NCI. The profit attributable to NCI, owners of parent, is to be shown as allocation in P&L only. The normal profit, OCI, total comprehensive income, allocated to owners of parent, allocated to NCI. And this is one statement which is to be disclosed in notes. This gives us the importance, size and importance of our subsidiary, like from that subsidiary parent, then we have subsidiary Indian 1, 2, 3, subsidiary foreign 1, 2, 3, how much net asset came from them and percentage wise, how much profit came from them percentage wise, how much OCI came from them percentage wise. So this gives us the size and importance of parent as well as the subsidiary. How much net assets comes from parent, how much net assets from each and every subsidiary, the bifurcation is available. Now, if any subsidiary associate JV, is not consolidated, because some exemptions are available under your Ind AS and they are not consolidated, the list of subsidiary associate JV which are not consolidated, you are required to write it in notes to accounts, as well as you need to just disclose the list along with the reasons if they are not consolidated. Done. Ho gaya. This was your chapter number 5, company audit, along with schedule 3. Hope this was very useful to you. If you liked it, please share it with all your friends so that from tomorrow your friends can also attend. Yeah, tomorrow onwards the session will not be on YouTube. Tomorrow onwards the session will be on Unacademy. They are free sessions only. You can use code Yeshas or Yeshas Live. You will be able to access the lectures for free. The link of the lectures are already there on my Telegram channel. You just go to Telegram channel. You'll be able to see the links of all the lectures. We are done with part 1 and 2. We still have 8 more parts. Total 10 parts are there. And from tomorrow, the timings are 6 to 8, 8:30 to 10:30. And I tell you, one very good advantage on Unacademy platform is you reply, the reply will be instant, immediate. When I take a session on YouTube, there's a lag of around 10 to 15 seconds. I speak and what you get, you hear. Usme there's a lag of 10-15 seconds. Unacademy portal, whenever I'm taking lectures, it's instant. There's no lag. So over here, what happens? I ask a question. I need to wait for 10 seconds, 15 seconds for your reply because the things have not reached to you. Unacademy, it's very instant. So that becomes very good. So you will only realize tomorrow that tomorrow you'll be answering a lot of things compared to today. Thank you so much. And just remember one thing. Starters are many, finishers are few. Make sure whatever you started, you finish it off in a style. Last 1.5 months is pending, yaar. This 1.5 months, give your best. There should not be even 1% left out from your side. Make sure you are giving your 100%. I know, yaar, I've started something. I need to make sure that I am finishing off in a style. I don't want to give up at this stage. Last 1 month, last 1.5 months has to be the best which is possible from my side. Chalo, see you all tomorrow. Any doubts, anything you have, or if you want to ask anything, please tell me. Thank you, Mohammed. Thank you, Vinay. Thank you, Sandeep, Mohit, Bala. Any questions you have related to today's topic? Done, Mohit. I already gave it. Thank you. Chalo, there aren't any doubts from your side. We meet again tomorrow 6 p.m. We'll start with professional ethics and then we'll go to standards. Bye bye. Take care.